as part of my research for my job, I started trading NFTs. I got into MVHQ. One of my friends, I was asking him like, where do you find about all the information about all these upcoming mints? He's like, this is the one place, MVHQ. So I joined MVHQ, and then I wanted to kind of dabble around with like Web3 businesses for our SaaS product, which was like an education platform for accelerators. And my co-founder Shihun, kind of caught him up on all the stuff I was learning. I had the idea for Ninja Alerts because I'm supposed to be running a fund full time and a startup full time, but I just got addicted to trading NFTs and was making good money doing it. So um, I was like, well, I know all these smart people in MVHQ. What if I could just have an alert ping me when those guys get into something, instead of having to track track Etherscan and stay on the voice chat all day or stay in the chat all day. Um, if I'm out and about, like how can I know what's happening so I don't miss anything? And that kind of was the idea for Ninja Alerts. I just like Asla mentioned, I applied the Lean Startup method to do customer interviews, to get feedback on it, to figure out like was it even worth doing. Was originally thinking of like a couple different ways of tackling it, wondering if a mobile app was necessary or we do SMS. Um, and the feedback that I got led us to launch the landing page for that. We did a mint of lifetime licenses. We sold about 1,000 of those for 0.25 ETH, and that was like from idea to the mint was about 1 month. So we were able to get it together pretty fast, and knowing that we had found upon a something that people needed, it exceeded our expectations. And so since then, I've just been building out Ninja Alerts, making it better and better. We've brought on another co-founder who's like a rock star front-end engineer. We're getting ready for a new big release in January, and of course, still making investments on the stack side and in the Bitcoin ecosystem.
Amazing. That's awesome background. So I'm gonna try to be like pretty methodical about this because you're the perfect person to ask about kind of how you approached it. And for anybody who's listening who's considering launching a project or a mini project or whatever else it is, right? From the absolute start, right? Like the first place you started was kind of in informal focus group land, right? Where you're garnering feedback from folks, what they wanted, those kinds of things. How did you find those initial people? What were those initial conversations like?
Yeah, so I forget exactly, but of course I reached out to like some of the leaders here at MVHQ, like Mitch, Jinzo, and others, and just said like, hey, what do you think of this? I also sent out messages in the whale chat, just kind of getting people's thoughts, and then if they showed interest or offered feedback, I would just DM them to continue the conversation to get more thoughts. And so one of the advantages of like kind of cooking an idea in this audience is I have this concept called the ideal early adopter. And so when you're validating a new concept, you want to really figure out like who are the people that know what they're talking about and who are the people who don't know what they're talking about. And so it tends to be the people who've actually achieved well, I guess it stems from the problem first. So like I had this problem, and so that's always like the best place to start is like if you have the problem yourself and it would solve a problem for you and enable you to save a lot more time, and it's a strong problem, not just like a nice to have. That's like the starting point. The next point is like validating with others, and so that's when I reached out to like the whale chat and a bunch of others, and was just getting their feedback on it. And it seemed like a pretty clear signal that would be useful. And people even said, hey, I would definitely mint for like this amount. And so when you're talking to somebody who has tried all the tools in the space, you can get a very high signal as to trusting their feedback as to like, hey, this is what would be really good. And so it's really about segmenting your market and understanding who you're talking to and the frame of mind that they're coming from and their perspective. And it's kind of like the process of doing customer interviews. I compare it to being like Sherlock Holmes, the investigator. You don't go out and ask people like, oh, like Aslo, who do you think the murderer is? Like, and then you say, oh, I think it's Jinzo. He rubbed me the wrong way the other day, so he must be the murderer. And I'm like, okay, great, I'm gonna go arrest Jinzo. It's more like, hey, Aslo, like where were you on the night of the murder? And who were you with? And do you know anyone who knows this person? And what is their relationship? and like it's really asking for like it's a fact finding approach, and then you're kind of using your judgment to evaluate the data and then apply a decision to that. So that's kind of how the process works, and you want to get a lot of feedback. I think I interviewed maybe like 10 or 15 people, and it was pretty there was a lot of positive feedback about it and like some recommendations that changed how we approached it. But then the next stage after the interviews is launching a landing page. So we didn't start developing the app right away. Actually, my co-founder Shio and I just had him start studying Solidity,
Mhm.
and that was also like, when you work with really talented engineers who are like really into engineering, like my co-founder is, like the happiest day of his life is when I'm like, hey, here's a good reason for you to learn a new framework. Like, there's nothing on earth that he would like to do more than like learn a new leading edge framework. And so, it's almost like a vacation for him. And
Yeah,
so, if end up being like we launched a landing page and nothing came of it, it's like that's kind of fine. But we launched a landing page, we put the Discord, and then we were just trying to see like, can we get enough people to join the Discord in the time frame that we could actually mint this out. And so you still have a second success criteria after the interviews, which is
yeah,
like when people are presented with the solution. The interview stage is all about finding the right problem and
yeah,
finding people's current behaviors and challenges, and
mhm,
then the landing page phase is the solution phase. We're actually testing a value proposition and the core features.
yeah,
And so on that phase, we got the landing page up, and then our Discord grew like super huge. We also, this was like in the invite people to get whitelist meta. So
yeah,
like that was like in the middle of that. So that was a huge help to like grow our Discord really big. I think people got sick and tired of that that meta like literally like within a month after we did it. But so we kind of leverage two things. It's like this core lean process, which can work and does work for every single idea in every single scenario, and then just being understanding marketing and knowing the meta and what other projects we're doing to grow at that time, and that ended up working for us as well.
I mean, just to like replay that and talk through how lean this was, right? Like, not a single thing created, not even the landing page created with a gate that would have said we're not moving ahead because we can't figure out what exactly the problem is, or there's nothing that seems strong enough or powerful enough or that people are willing to pay for enough. Hence we can't move ahead. We need to keep exploring, or that kind of a thing, right? I mean, I think it's like really worth calling that out because for I feel like normally outside of lean methodology, right, most people's visceral reaction is they have an idea, probably came from themselves, right? They kind of talked about it with some folks, not necessarily a true sense of how powerful of a problem or a solution or a problem that they're solving, how much people would be willing to pay if they'd be willing to pay, even if it's just spoken, right? And jump right into the solution side of things, right? Only then to then possibly have it fall flat. And like solution can still fall flat. Like you could have done your research, right? People could have said, this is it, this is awesome, I'd be willing to pay this, and then they're not actually willing to take action for some variety of reasons. But I just think it's really worth calling out like how far you went without creating a single thing. It's a really good opportunity that anybody could probably take on.
Yeah, 100%. I mean, the lean model basically inverts what our natural instinct is, which is to come up with an idea and then build it and perfect it until doing a massive launch. And instead, going to customers first, validating the demand, and stacking that demand up, and then launching an MVP and then iterating on that MVP with customer feedback, because the biggest risk for early stage startups is that you waste too much time going in the wrong direction. Not that like you can't build a good product. Like lots of people build amazing products that just don't fit a need, and that's like one of the biggest causes of startup failure.
Right. And the need here, right? And at least as I'm hearing it from you, right? The need was people want to be able to, in general, make more money, right? That's the problem that they had, make to stack more ETH. And the possible approach to it was they wanted to be able to track the folks that they trust at the end of the day, right? And get alerted for what it was. That was the problem you distilled it to.
Yeah, exactly. And especially be able to like you know get away from your desktop and like go spend time with your friends, or if you have a family, to be able to take your kids to the soccer practice that they need to go to, and be able to get the alerts on the go, so that you don't have like that sort of addiction or dependence on being glued to your computer, which can
Yeah.
definitely negative affect your life if you can't balance it.
Yeah. Do you have a framework, by the way, for thinking through needs before they start? Like, for instance, will you use something like sometimes I think through like Maslow's hierarchy, for instance, right? Like, what do people really care about at the end of the day? A need. They need to survive. They need to eat. They need to make money. They need their health, et cetera, et cetera. Is that Do you use a similar framework or starting point to determine how powerful of a need will possibly be?
Yeah, totally, man. I mean, I wrote a book on this, so I have like, keynote after keynote of presentations and different frameworks and stuff I use for when it comes to the pain point specifically. I'll give you guys some like some cheat sheet here based on just my top of my mind. I do have like a longer form written out one if anyone's interested, but basically there's like pains, problems, needs, and wants. And like pains are like, like just like you think about it, like a severe pain, like, my arm hurts, so I have back pain. And so those are like the highest form of opportunity. And then problems are also pretty good, but they're like something that is challenging, it gets in the way, it makes it more difficult. And then there's needs, which is like you need it, but you're not experiencing any direct consequence as a fact of that. And then there's of course wants, and there's like lots of things that we want, but unfortunately, they're not top of priority in terms of like we have to address them immediately. Like if you're actively in pain about something, you're gonna have to address it. And then if it's a problem, it's interfering with your day to day, you're also going to address it before you address a need or a want. And so the higher up you can go in the stack, the better. Now, you could also end up in a place where you have to consider like competition and um, strategically speaking, like it's not always the best answer to go right for the pain, but if you can find a pain that no one else is addressing and people aren't thinking about, then I think it's always better to do what I say is a addictive drug for a small group of people rather than a vitamin or nice to have for a large audience, because you can more easily expand an addictive drug to a larger audience by broadening the use cases than you can like take a vitamin and make it an addictive drug. And so the pain severity is one axis and the other angle is the pain frequency. And so the pain frequency is generally looking at the toothbrush test is a common way people think about it, where it's like, is it something that people are going to use every day? And so like you use a toothbrush every day, twice a day, maybe some people once a day if you're not hygienic, but seeing something that people can use on a daily basis can actually dial up from a need to a higher level of pain, right? So the more frequent, like if it's a nuller type of pain, like if you have a headache, it's not really like that painful, maybe it's a problem, but if you have it like constantly, then it becomes a huge pain, as opposed to like maybe you have a broken arm but it just doesn't hurt, so you have to consider the problem from different angles.
Yeah. So like all the way west on the spectrum for context, and not to be like too morbid here, right? But like all the way west on the spectrum would be if you have some kind of serious disease and you urgently have to take medication to be able to survive, right? You're going to be able to sell that immediately. Versus maybe at the other end of the spectrum might be like, upgrading to the latest iPhone or a nicer iPhone possibly. Although I guess sometimes those feel a little bit like they overlap, but you get the point here. Um, so since at the current state that the NFT market is at currently, right, and all the Web3 market is at currently, we're obviously in a bear right now. Has your thesis and outlook changed into what people want and what people need and where this is heading for yourself, for your portfolio companies? Like, how has it changed as you've kind of seen the last year unwind, let's say, or year and change unwind?
Yeah, I think, from a fundamentals perspective, I don't think it's changed. I think a lot of this bear market was caused by um, things that don't necessarily change the dynamic of like the underlying technology and use cases. It's part of it's like we were in a macro bubble of like COVID money, stimulus money, and inflation. And now, we started, there's the war with Ukraine and Russia, and there was Terra Luna, and there was, you know, um, Alameda and FTX and 3AC and like all these sort of like bad actors who like wiped themselves out because they got too greedy and too levered. Um, I guess it's not so much different than maybe like 2008 financial crisis when like a lot of people um, on Wall Street just like baked these horrible financial products. And so I don't think it changes like the underlying goal or direction here. However, when I look at the venture capital ecosystem, I think that anyone who got into Web3 or the startup slash VC ecosystem in 2021 just probably saw a completely unrealistic example of what's normal. Like having been in this space for a decade, like the valuations and the type of things they're getting funded are just way out of whack to like what is I think normal. And so you know um, when I came into this like investing through the accelerator, like our goal is that a company coming out of the program, the average would raise like 350K. Like that's what I've seen as like a solid average performance for an accelerator fund, which is their companies come out of it raise 350K on average. And then with Stacks, and we're like a very small new chain, it literally just launched like 2 months before I started the fund, and we had 1.1 million on average per company coming out of the accelerator program. So I think that those valuations are coming back down to normal, and a lot of these funds, like the VC funds who didn't have a trading branch, a lot of the ones who have a trading branch are keeping their funds in like FTX or other um, C5 platforms or even on Luna, are getting wiped out and like they're having a lot of problem. But by and large, like VC is a 10-year business. It's a 10-year um, capital allocation, and so it's not going to be as affected as other parts of the Web3 industry. So there's still lots of funds who have plenty of capital to deploy. You're going to see angels affected. You're going to see the because that's their personal money. You're going to see the funds who engage in trading be affected significantly. But otherwise, like the early stage VC ecosystem is doing pretty well, and I think a lot of people brought on new cash during the previous bull run, and so with the economy going down, we're seeing a lot of layoffs from Facebook, from Google, from all of these companies, and that's talent that can go into the market and start companies, that can join companies, and so it's become a buyer's market where in the bull market it's like people like the salaries were just getting out of whack. Like a blockchain developer being paid like 7 figures is just an example of like how the talent had um, the buying power or the sort of the leverage in the equation, whereas now the equation has shifted from VCs have like more of options. They can move more slowly. They can do better diligence, and they can work with companies to make sure that they actually are on the right track and hitting their milestones. Down to startups who have the capital can actually have all the fun in the world getting the best talent that's looking for their next thing right now.
Yeah, yeah, that totally makes sense. What's interesting about that too, right, is that totally, of course, the direction of leverage has changed as it relates to talent. Also, that there's an increasing chunk of folks who don't necessarily want to be part of a big company either, right? Especially as you bleed more into Gen Z compared to maybe what was millennials before, and even some millennials also. There seems to be an increasing chunk that don't want to go into that, and maybe it's as a result afterwards of layoffs. Are you seeing a trend in that direction also?
Yeah, absolutely. I mean, that's more of like a macro trend. Like I think it's been for the past maybe 30 to 40 years that um, GDP has been growing, but wages have not been growing. And so we are in a time of like automation of jobs in general. Like if you've seen like GPT-3 and the chat and like how crazy this thing is, automation has been slowly eating away at all these different industries, and it will continue to do so. And so people need to be moving into more creative industries that are not going to be as easily replaced by AI or are going to be enabled by AI. And so, entrepreneurship, the gig economy, being a creator, this is going to be the majority of where people are finding an income and career in the future, in my opinion.
Yeah, I totally agree with you. We've had a couple discussions regarding automation, like way back in even April, which is I think when we started numbers therapy, if I'm not mistaken. We were talking about what's going on with the macroeconomy, what has to be adjusted, how does inflation come down, all those good kinds of things. And we did talk a lot about automation and certainly where it could bleed to. And then, with certainly the past week or two, in terms of development, that's certainly just supporting that a little bit more. So I definitely agree with what you're saying. The obvious question that people might have as it relates to your accelerator, right, is why BTC specifically? Can you talk to that a little bit? I'm curious myself to hear that thought process.
Yeah, totally. I mean, so whether you're starting a fund or a startup, like the most important thing is the strategy of like what is your unfair advantage going to be and how are you going to once you've found, a product market fit, how are you going to fend off competition and in the long term, end up on top. And so I love to join something at the beginning of it. Like I love to join not like a big pond where I'm going to be a small fish, but I love to join a small pond that's growing very fast and just become the biggest fish right away. And so when I came into it and I kind of looked across the industry, there's a lot of interesting and exciting, alternative L1s, but they're kind of like always shuffling back and forth. Like, Solana was like number 5 and now it's down to number 17. Polygon was like number 20. Now it's like getting a lot more ground. Polkadot seems to be doing the same. Cardano has dropped a little bit. But I think what's almost certainly going to be here in 10, 20 years will still be Bitcoin and Ethereum. I don't think either of those are going to be going away. And so the opportunity to build Web3 with Bitcoin as a settlement layer without changing Bitcoin's core properties, because we know it's really difficult, really spoke to me as an opportunity that is both a contrarian play and a long-term play.
Yeah.
And so from my perspective, like, um, the core chain is already there, which is Bitcoin. There are probably many different like L2s and options for how Web3 will appear. Stacks being right now the best one in my opinion, and the most well funded and the most confident team behind it. But there's also going to be client-side applications around Lightning. There's also going to be ZK rollups on Bitcoin, but that would require some changes to the base layer. But I just thought it was like kind of like a contrarian bet that seemed like has a very high percentage chance of being an end game scenario. And so it's really just looking at where I could find the maximum upside. If I were to jump in right to Ethereum, I would be having to compete with so many other venture funds that it'd be hard to stand out and get noticed and build partnerships and alliances where coming from the Bitcoin perspective, like all the big funds who care about this are coming to me and like, thanking me for all the work I'm doing. And I've very quickly become the biggest player in the space. We're actually the most active investor in the entire Bitcoin ecosystem in terms of number of deals. Now we're not the biggest, we're a pretty small fund, but we found a way to uh, leverage what we have in a way that makes us stand out and be synergistic with some of the biggest players in the space.
I can only imagine, right? If we were back like a year and a half ago, right? This all probably ties back to your 10-year horizon thing, right? At the end of the day, because if we were back a year and a half ago, you're probably getting side eye, right? Like, what are you doing? Why BTC? What's going on, right? With all these chains kind of cropping up, only to have it now look particularly smart, right? So it's like a very very different conversation, but one that I'm sure you and your team don't even care 1 ounce about because you have that 10-year horizon that exists.
Yeah, absolutely. And I think, it's just like at this point in my career, I have a pretty strong amount of confidence in terms of evaluating a technology and evaluating, looking at from what I would do, right? Like in terms of like trying to predict where the startups are going to go next. I just think about myself, just like for Ninja Alerts, like I think about myself in terms of what do I need, what are my problems, and then as an investor, I look at where would I want to build, where are the biggest opportunities. And if you look at Bitcoin specifically, there's $300 billion of liquidity that's non-productive, right? There's $300 billion of Bitcoin just sitting there, not being used in DeFi, not being used in NFTs, et cetera. And so to me, that seems like a lot of upside if we can crack the code on it. And then having known the team behind Stacks for a decade and then coming back into it and meeting with all of them again and seeing the leadership and the competence and the organization that they have, for me, sort of sealed the deal on it.
Yeah, that makes sense. So that's actually a pretty good segue to a question or two I have, which is, looking through Stacks, it's a pretty wide portfolio of companies, right? It seems like it's kind of industry or sub-industry agnostic to some extent, other than, of course, Web3 in blockchain. A couple trends, though, that I do see in there when I was looking through data, rewards and attribution. Are there any other trends that stick out there? Do you find that within Stacks, like you guys are veering towards a certain direction, or that there does tend to be a theme across all of your portcos?
Yeah, I think the biggest theme is probably infrastructure at this stage because Stacks is so new. And so, you know, our primary consideration is really the team. So like from my perspective, like what we're trying to do is we're trying to create the best community for founders, investors, and mentors in Web3. And so we trickle down everything we do, every action that we do and investment we make from that perspective. And so at the base layer, it's about who are the best founders that we can back, who, in the accelerator stage, people are going to probably change their idea too. Like whatever we're investing in, it's not really like the idea itself, but the
Yeah.
person and how they've thought through that idea.
Mhm.
And then who's going to be a great ambassador to our community and add value, not just to themselves and be able to make the most of the community and platform that we provide, but also give back and be an ally to the other companies. Because one of the unique things about building on a specific blockchain is that if one company is successful, they're going to bring in a lot of users that are then going to be looking for other solutions. And so all of the companies together really do need a spirit of like collaboration, and you'll have people who are kind of like competing with each other, but the dynamic shifts to where there's a lot more co-opetition between portfolio companies, even if they have overlap. And so from our perspective, like we've also taken an approach where we've tested a lot of things. So every cohort, like we have a new kind of idea that we're testing, or we'll allocate a certain number of investments to try something wild. Like I think though, at the core of it, it's really about the best ideas are kind of the maturity of the blockchain. So something like Ninja Alerts would not make sense on Stacks because the infrastructure is still being laid right now, right? And so there's not like the same level of users. Like the most of the users are other startups, so like enabling technologies, or like artists, the creation of new types of digital assets. But we've kind of figured out that thesis over time by just using first principles logic and like following the market. And we've tried a lot of things, but we're kind of sticking more to an infrastructure phase now. But at the same time, if we have a great founder and like they're just an incredible team, we will try to back them anyway, regardless of the idea.
Yeah, that makes total sense. You want to break down, by the way, first principles as well, just for anybody listening not familiar with that. I think would be a very useful thing to talk through.
Yeah. So first principles, I think it was popularized by like Ray Dalio in his book Principles, but it's something that you can see like a lot of the best entrepreneurs like Steve Jobs and Elon Musk use when they're thinking about an industry. And so I think a lot of people tend to look at an industry and they tend to think about like things as like just facts and reality, right? But people like Elon Musk, they actually try to understand why something is the case through a chain of logic and then see if they can attack any one of the links in that chain to change things. And so for the example for Tesla, like the reason why maybe so many people never tried to do electric cars is because some of the inefficiencies in batteries. And so what Elon Musk did is he kind of broke that down, looking at the industry and figuring out what the critical block is. And then he started thinking about, hey, how can we make these batteries cheaper? How can we make them more higher capacity? What do we need to do? And sort of like looking at what the underpinning logic is to something and why things the way they are, not necessarily accepting them, but using that as a guide to how you're going to maybe do something different than everybody else. And so
Yeah.
it's also how a lot of the lean startup method works. It's like it's kind of like a form of deductive logic, like working backwards from, hey, the biggest risk in a startup is not that you're not going to succeed enough, it's that you're going to fail. Like too many startups fail. Okay, why do startups fail? Okay, the biggest reason is that they build something that nobody wants. They spend too much time and resources on that. Okay, working backwards, how do we find out what people want and what the right direction is in the least amount of time and resources? So it's kind of like this deductive chain of logic.
Yeah, perfect. Thank you for explaining that. So, um, shifting gears a little bit category wise here. part of your portfolio also, and I know certainly part of your thought process is in the gaming side. It's a side that a lot of us in here have talked about. I know a lot of people are keen in MVHQ to talk about. So I have a couple of questions here that kind of spread out. So first off, and I don't know the answer, but were you involved in Moonray coming in? And if so, do you remember kind of what the thought process was there, what you liked about it, that kind of thing?
Yeah, definitely. I'm the first Web3 check in Moonray. So basically, this was midway through our first cohort of investments. And, I'm a big gamer, and I think that the next bull run will likely be catalyzed by the gaming vertical, by bringing on millions of new users into Web3. We've seen Reddit, I think they onboarded 3 million wallets with their avatar drop. So, sort of like these, the onboarding of when we go from bringing on 3 million users to 30 or 300, I think it's really going to come from gaming. And so, knowing that back then, I actually read about them on a site on Republic. They were doing a crowdfund, and so I just cold called Rodrigo. I talked to him, and I was really, really impressed by everything he was doing. And I kind of told him about what was happening in Web3 and the gaming space, and that it could help him to get some investors for his company. And he like immediately caught on. And so with Moonray, the idea was also very impressive, which is our motto is that we invest in outstanding teams who can find an easy way to do something difficult. So the opposite of that is a hard way to do something difficult, which is like I met with a company the other day, and I'm like, so you're saying that the way you're going to win competitively is you're just going to out execute everybody? And they're like, yes. And I'm like, well, the thing that I like to invest in is teams where they can execute extremely poorly and still be number one and be very successful and have a huge business, because you need to have an unfair advantage, and you need to find a way to uh, zag where other people zig, and go in the other direction that's really valuable. And so with Moonray, it was like all of the sci-fi games in the game industry focus on near future sci-fi, and of course there's a lot of like medieval games and things like that, but there's sort of like a Hollywood approach in the games industry where they focus on franchises. They focus on things where it's in a spreadsheet and it's been done already, and we can like have clear certainty that's going to work. Like they're not really out there trying something that's really different. And so with Moonray, it was like instead of making a game that's 500 years in the future, I want to make a game that's 50,000 years in the future. But we're going to use all of the proven gameplay of best practices for the action RPG segment, which is actually the most profitable and successful segment in the games industry. And so from my perspective, it was like, hey, this is pretty low risk, but very high upside. And I did find, like, I agreed with the vision of the creative direction they're going, but to just innovate on something as simple as a creative direction and find something that is very, very compelling and different, and like the first time you see it, you're like, wow, but you can just copy all the other best practices in the industry and not innovate in that area, which is really, really hard, to me was an easy way to do something difficult. And this was a team who had, been grinding it out and bootstrapping for multiple years, extremely dedicated and committed to what they're doing. Now they weren't like seasoned executives in the industry, in the games industry. It's kind of like their, um, first major game they're doing, but they have been doing it so long and just grinding on it that I knew that they would probably never give up. And also, having talked to Rodrigo, I was like, this guy, he will be a natural fundraiser. And so I think it was like they joined 2 weeks before our demo day, and within 3 months or 3 or 4 months, they raised $7 million. Like from my first check being 50K that day to 4 months later having $7 million.
Awesome. Absolutely awesome. Before we kind of expand on that to kind of your thesis and onboarding and all those good kinds of things, how much of a risk is it that you see from companies that you see that the founders will just drop off, right? Obviously, one risk that you thought was de-risked in this case was you thought they were just going to go on forever, right? Considering the background that existed. How much is that a thing that comes up, and has it ever blindsided you in some cases where you thought they were going to be going forever and they just kind of cut bait, either with reason, right, because it just wasn't going in a good direction anymore, or they just surprisingly cut bait for some reason?
Yeah, I think for someone who's new to investing, and if you're coming from like a place of crypto, or maybe you're not a founder and you're kind of trying to get into the angel investing, things like that, I think that would be something that you really want to be super skeptical of. Coming from my perspective, like I've been an entrepreneur for a decade, so I can meet somebody like in 10 minutes and I can get the vibe like how dedicated this person is because I've sweated and blooded my own companies in the past. That's like it's very easy to see that type of person. And so someone who's going to be not committed is like the biggest red flag. Like we have a lot of people come and pitch to us and like they're like, yeah, I want to go full time in my business after I get funding, and I'm like, listen, like I'm not an employer, I'm an investor. You are the employer. You're the entrepreneur. You're supposed to be creating jobs, and nobody is going to take a risk on you with their money unless you're going to be putting in the sweat equity and taking the risk first. And it's a telltale sign that like if someone doesn't believe in their own business enough to jump in and put it all in, then it's probably not even a good idea in the first place. And so that's like the table stakes, I think, of even getting started. And it's not enough to make a yes. You need to have all the other pieces of the puzzle, like being adaptable. And I think actually adaptability is even more important than determination. But you need to have both. You need to have intellectual and strategic flexibility, and also the desire to never give up, but not be set in your ways and like only pursuing one path. Because then, if you don't have the adaptability, you just have the determination. You'll just end up going in the wrong direction.
Yeah, that makes total sense. All right, so let's get into a fun related topic to what we were talking about with gaming. So your thesis is gaming is going to drive the big kind of on ramp in the future. That's going to drive, or at least partially drive the next wave. Will it be Web 2 led gaming or will it be Web 3 led gaming? Any thoughts there?
That is the debate. I think that is the biggest debate right now. And so, there's like Web 2 studios, there's like a Web 2.5 approach, and there's a Web 3 approach. And so, kind of the way I think about it is that I think that the better way to go, if you were like, let's say I have several portfolio companies, they're building GameFi tooling. Okay. The challenge with building GameFi tooling for like Web 2 companies is that these guys don't know what they're doing, right? Like they're not the ideal early adopter who's going to come into the space and potentially get it right. Like most of them are going to get it wrong. Like the Web3 companies who are Web3 native who are having success and getting traction, they're going to continue to do things right because they understand it through the right lens.
Mhm.
And so, we've seen so many different corporate NFT projects. I'm sure you guys have all seen these. Not to call it any of them, but like some of my biggest L's have been like some of these corporate NFTs because they come in, they don't understand the space. Now, if they have the right partners, I think that's a different story. But I think that the most successful games will be Web3 native games. Now, I do think there will also be some Web2 games that are successful in the space. But my bet is that if it's a Web3 native game that's getting traction and being successful, they will have a much higher hit rate of being successful in the end. And I think those that are the most successful will be the most successful games in the world. And so I tend to err more towards the Web3 side. It is something I've debated a lot, but I think it just comes down to I've spent a lot of time in corporate innovation and teaching lean startup to major corporations, and just if you're coming from that industry, it's very hard to change. And so the Fortnites of the world where they can just print unlimited skins and they can just make as much money as possible are not going to be the first ones to change their business model and like give skins away for free that then they can make the majority of the revenue from secondary royalties. Whereas the current game companies in the Web3 space, like they understand how Web3 culture works, what their users want. The problem being that the Web3 audience is super small, right?
Yeah.
Now, the other thing to note is that if you look at some of these mobile games, like Gabe Layden, he was the CEO of Machine Zone. All of his revenue came from whales, right? Like probably 90% of his game's revenue came from a very small group of individuals. And so if you think about like where are the new whales, they're probably on in Web3. Like Bored Ape and Other Side, it's really, really difficult to have a company who's never built a game before build a game, so that's a risk involved. But the fact that they have all the biggest whales in the whole Web3 space as a part of their community is probably a really, really unfair advantage and something that may end up working out quite brilliantly.
Just like how many times have we seen this similar concept play out though, where the incumbent company didn't innovate and cannibalize fast enough, right? Like how many of those are there at this point? Blockbuster, um, Polaroid, Toys R Us, like I don't know, like all these borders, like this huge list of companies that just didn't make the move fast enough and got left in the dust afterward. Like, do we think you're going to see some dead bodies afterwards from some Web 2 companies that just did not move fast enough?
I'm sure of it. I mean, it depends. Like, I mean, if like gaming companies like Ubisoft and Rockstar Games stuff like that start acquiring Web3 game companies, they'll probably be fine, and that may end up happening. Um, or Microsoft, or Sony. Like, I think that gaming companies tend to be very good at acquisitions, and that's where they kind of shine. Like Microsoft bought Bungie. Um, and now they're just pumping out Halo after Halo. Um, so I think that the games industry is probably going to be okay because they have that history of acquisitions. But yeah, it's just like the tale is all this of time. Like companies facing the innovator's dilemma and just not necessarily going extinct in like a big bang, but they tend to like um, shrivel up and dehydrate until there's nothing left.
Yeah, yeah, that's that's a better visualization of it. That's fair. Uh, Related to that, in general, like how different is in your mind Web 2 versus Web 3? Are these two totally different approaches that one should take? Is one of the things I kind of caught inside of what you're saying, right, is that these Web 2 native companies, they just don't understand users well enough. They don't understand what the subtlety is, how trading goes, like whatever the Web 3 subtleties are that exist, right? So are they tremendously different things, or should the same lean startup methodology principles, let's say, have applied in this case, where they, the Web 2 companies should be going out and doing more, immersing themselves, heavier market research, very, very, very similar principles that would apply in both Web 2 and Web 3.
Yeah, so I spent a lot of time in China. I worked with a lot of multinational enterprises, Huawei, Tencent, and state-owned enterprises in China. And I would always get this question, like, because I was like the Silicon Valley guy teaching lean in China. And people are like, "Oh, like, does this work in China? Like, Chinese culture is really different, and you know, does lean work in China?" And my answer was always the same, which is that an entrepreneur in China is more similar to an entrepreneur in America than a entrepreneur in America is similar to a non-entrepreneur.
Yeah.
So like when it comes to the psychology of how people think and like human beings, like culture is a very like it's like the icing on the cake. In fact, I say like culture is the shrimp on the pizza in China because they have pizza in China, they have pizza in the US. The pizza in China just has shrimp on it, which is not for me, but a lot of people love it there. And so the underlying like human psychology and sort of how markets and capitalism work, China's actually a communist country, but they have a lot of capitalistic elements. It's like a state-driven capitalism, and it all works the same. People are motivated by the same things. People are motivated to make money, to have a career, to have a family. Culture and behavior are a layer on top, but the underlying methodology of understanding your users and how to bring a product to market and what makes those products successful is eternal. Now, the difference is the behavior model and what's potential to do in Web3 is just night and day, radically different than Web 2. Like, I spent 10 years doing these startup bootcamp programs where we would have 50 entrepreneurs form teams and like pitch ideas, and like over 10 years, like I heard every single idea like again and again, like the same ideas all the time. I'd heard every single idea in like a decade. When it came to Web3, it was the first time where I was like, behaviors were completely different. Like the way people are incented to do things, and the way they behave is kind of like scrambled and enabled in a completely different way by the fact that these assets have value, right? And so in Web 2, like you're really relying on like just removing friction from something. And in Web 3, you also have the additional carrot of giving people something of value. And so, like, as we've seen with like the Blur airdrop, for example, the fact that they incented everybody to trade on their platform for a month to get an airdrop made them like number one above OpenSea on different days. And so there's completely different behaviors. There's completely different uh, a user segment, and understanding the user is completely different in Web two. And I think it requires being immersed in it to really understand and launch a product that is going to be successful.
Yeah, that makes sense. I mean, do you also think though that with the rise of Web3, with the rise of NFTs, for instance, that there's been a tremendous development also in terms of stickiness, I feel like, as well, right? If you contrast this, let's say to like either your Fortnite example, or even contrast this to like Kickstarter, for instance, right, where you're getting kind of your initial community, but from a linear standpoint, right, at the community, there's kind of no place for them to talk about. You kind of just like pre-purchase your product, and either you get the product or you get the product in equity, and then you're kind of like isolated at that point, right? So do you think what is your perspective on like how much of a step function jump we've had in terms of stickiness because of the construct of NFTs versus like previous crowdfunding model, previous ownership models, things like that?
Yeah, it's hard to say, to be honest with you. I think that you know, it's kind of like how the meta is always changing. Like, I think that the meta constantly changes, and I think certain things only work a few times. Like the invite meta, only worked for a certain while, then people got tired of it. The airdrop meta, like when we had like the SOS airdrop, and then we had these different airdrops for different marketplaces, worked for a while, and maybe those things will come back in popularity again. But some of these things with Web three can be a bit like ephemeral in the sense that like they can kind of work in the moment, and then they run out of novelty and don't work anymore. And so I think that that's an important thing that people need to figure out how to distinguish between, which is like what is a fad and what is a trend. And to figure that out, I think you have to really peel back the layers of the onion and go as deep as possible to look at what's driving people's behaviors. And so, if I'm, for example, like the invite meta, you could probably predict that that was not going to last very long because you can only bother your friends so many times to like join another NFT Discord server, right? Like in the beginning, I think one of the coolest things about Bored Apes was like they had a Discord, they invited all these people to it, and like you're hanging out with all these people with the PFPs, and then after that happened, there's like I'm in like hundreds of Discords now, and I have to delete servers to join them, and people have PFPs from all different collections, not just from Bored Apes and CryptoPunks anymore, right? So and I think maybe like the teams that are the first to exploit that maybe have more staying power and sticking power, like Bored Apes. But at the end of the day, Bored Apes has kind of become like this bragging right and this like signal of wealth, this signal of sophistication and knowledge, and it's like more impressive than like a Twitter blue check or like having a real life Rolex or Lamborghini is having a Bored Ape. And so even these like behaviors and motivations can shift and change over time before they reveal themselves for what they really are. And I think that's actually the really fun part of being in this industry is like I try to have a lot of intellectual humility and um, honesty about like open-mindedness to say like here's what could work, or anything, almost anything could work except for the things that we've already seen that haven't worked. And unless you like use the five whys and first principles thinking to kind of drill down, and there's nothing there. But the potential of Web3, the limitations, the limit is your own imagination. So that's why I think it's like such a great space to be in. It's such a fun time to be alive, because it's like the beginning of the internet. It's like
Yeah.
who would have known, all the things that were going to happen in the future. None of us are able to predict what's going to come next. We know that like some things are probably more certain than others, but beyond that time horizon of like 2 years from now, we really have no clue. And I think that's the most exciting thing.
I mean, I think this kind of comes back really well full circle to your toothbrush test comment earlier, right? Which is, these kind of like discrete actions that happen, airdrops or anything like that. Okay, like sure, they maybe catalyze community in the beginning, or they make it a little bit of excitement or a spike at the time, but they're not like sustainable, right? I mean, you're going to have to find something else to sustain the engagement within the community afterwards, right? So it seems like, especially as we're in this kind of prolonged bear right now, it's the core product that's really what's standing out currently, right? So, in the case of MBHQ, for instance, it's the community that exists there, people staying sticky, it's people liking to trade ideas, trade alpha, things like that, right? In other cases, it's an outstanding question where they don't even have the answer yet of like, how do we keep people sticky? How do we keep, what's our thread that keeps this community engaged, with the same, the same things that they like, or the same topic that they like. And it becomes very, very clear which ones kind of didn't have that put together well originally. And it was maybe just a discrete action that caused the excitement, maybe.
Yeah, definitely. So like to add to that, I'll take it from a different angle because that what I just said is like more the VC angle, the trader angle. But looking at it from a founder's angle, I think it comes down to identifying a core use case, like you said, the toothbrush test, or an important use case, is exactly what we do with Ninja Alerts, and then just being really focused to be the world class, to be make sure that you are the best at that one thing, and that's what's going to give you longevity. And so that's how we think about like Ninja Alert specifically, is that we need to be the best in the world at alerts, and no one can even come close to us. If we can just accomplish that goal and maintain our lead, we'll be successful. And so looking at the other products in the space, you really get into trouble where you have to have like a suite of different tools and features, and maybe you can have a couple extra features that complement what you're doing, but you have to be the best in the world at a use case that matters. And if you can just do that, so that people are going to keep coming back to, like, I don't think I'll ever not want to see the stuff that JJ is minting or buying or trading. You know what I'm saying? Or what Dizzy is buying or trading, or what Jacob and Jake are buying and trading. Like, I always want to be able to follow what they're doing, um, and follow like the best traders in the market, get alerts from it. And so I don't see that use case going away, and that's why we strategically picked that direction and are hyper focused to be the best in the world at that. Like, a lot of people can have the same feature, as long as we are 2, 3, 4, 5 times better, we will be successful.
Yep, that's a perfect wrap up to today, man. Trevor, just an awesome conversation we had. I really appreciate you kind of weaving in both from the investor side, the builder side, all those kind of good things, current state of the market, and your thoughts. Just absolutely awesome conversation. Really appreciate having you on. Everybody listening live, appreciate you like always. Perfect example is a follow up to this conversation. If you have questions or thoughts or things that you want us to delve into deeper in a follow up conversation, please reach out. Please hit me, and we'll make sure we get someone on that can talk about whatever the topic is or subtopic. That would be totally awesome. But really appreciate everyone listening live, everyone listening later on as well. Really appreciate you too. And we'll be on next week for the absolute last episode of Numbers Therapy in 2022. So look forward to seeing everybody next week. Thanks so much, everyone, and we'll see you in VC1.